This week was a huge one for DeFi news, with major companies like Stripe and Visa leaning further into the stablecoin market. Meanwhile, the US government has been cracking down on the DeFi industry. In today's video, I'm going to go through highlights of DeFi news for the week ending April 26th, 2024, as well as some new opportunities in DeFi and airdrops. Welcome back to Dynamo DeFi. My name is Patrick. As a reminder, nothing in this video is financial advice, and you should still do your own research before trying any of the strategies I talk about in this video. Now let's get into it. Before I get into this week's news, I want to share that these news segments are sponsored by RabbitX. RabbitX is a perpetuals decentralized exchange that is purpose-built for traders. They have major tokens like Bitcoin, Ethereum, and Solana, as well as many other favorites of crypto traders. It's lightning fast with thousands of orders per second. And what I especially love about it, because I liked RabbitX before they even came onto the channel as a sponsor, is that not only do they have a killer web app, but they also have a mobile app available both on iPhone and Android. So if you want to try out RabbitX, link in the description. All right, so now let's get into the news for the week. Headline news is that major companies are leaning into stablecoins. Here's an announcement from the co-founder of Stripe saying crypto is back. So Stripe is going to start supporting global stablecoin payments. In their demo, they use Solana. It's available at least on Ethereum to start, possibly other networks. And so people who are using Stripe as a payment processor, which is a huge portion of the internet, me included, I use Stripe for my premium newsletter, will now be able to apply to receive crypto payments as well. And I think that's awesome. It shows that stablecoins are becoming an accepted payment method. And I think stablecoins could be the Trojan horse for crypto adoption, as some people are saying. I would argue that stablecoins are already the second killer app of crypto. Bitcoin's the first. You can store your own value, carry it anywhere in the world. But stablecoins are also extremely valuable. And the stablecoin supply has just been growing lightning fast over the past few years. I know in crypto, it's easy to get caught up in the day-to-day, week-to-week, but if you look at the stablecoin supply, say 4 years ago compared to now, it's added hundreds of billions of dollars of market cap. And one thing I want to note now is that this dashboard I'm actually showing you is built by a company you've probably heard of, Visa. And so that's the second piece of stablecoin news, is that Visa announced that they are now maintaining this dashboard for on-chain analytics about stablecoins. And that just shows that major payment processors are now taking this seriously as a new form of payment. And you can understand why, right? Because the numbers speak for themselves. The total market cap of stablecoins is now over $150 billion. The number of transactions is incredibly high and growing, with trillions of dollars of value being transacted over the past 30 days. And I know that a lot of people, when you talk about stablecoins, their eyes kind of glaze over and they think, okay, but if I'm investing in crypto, why does this matter to me? You might even think, isn't this getting back to the old fiat money system that a lot of people in crypto were trying to get away from? But what I would argue is, first off, getting more people and applications on chain is good for the overall crypto economy because it builds familiarity with the technology and ultimately leads to more people exploring other tokenized assets. But additionally, if you look at these stablecoins that Visa is tracking, look at the stablecoins that Stripe is supporting. These exist on public blockchains, right? They exist on Ethereum, on Solana, on Polygon, on Avalanche, on other places. And so even if the stablecoins themselves aren't directly accruing value to you as a crypto investor, to me as a crypto investor, they indirectly are, because what do you think happens to the value of those networks when instead of $150 billion of stablecoins, there's $1 trillion or $10 trillion of stablecoins on chain? And instead of $2.6 trillion over 30 days, it's 20 or 30 or $40 trillion, right? Every single one of those transactions is generating fees for the network. And as the total value on the network becomes larger, the total value of securing the network becomes more important. And so personally, I think it's great that companies are recognizing stablecoins as a future payment method. Other news, the total value locked in all of DeFi has been, I would say, consolidating over the past few weeks since peaking in March, still up significantly from where it was last year, growing from around 50 to 60 billion up to currently sitting at 140 billion. And it's right around where it was in the early part of 2022 right now, or the early fall of 2021. So I don't think this is a bad place to be in, right? Of course, I would love for us to hit all-time highs, and I think that we will hit that sooner than later. But right now, there's money in the system. It's enough to support new applications and enough to justify new people building and new people trying out a lot of the applications in DeFi. So I think it's a really exciting time to be in DeFi at the moment. Other news on the less positive side of things, the US government has been going after a number of crypto companies recently. And I say the US government because it's actually not just the SEC, it's been several different agencies. So we have Consensus, and the Ethereum development company, filed a suit against the SEC, basically asking them to declare that it's not a security and to give some regulatory clarity. But in this suit, they mentioned that they received a Wells notice for their MetaMask product. If you don't know Consensus, they built Infura, they built MetaMask, they built the Linea Layer 2, but probably their most well-known product for the average person is MetaMask. And, that is somewhat concerning that the SEC could be going after MetaMask since that is one of the most common wallets in crypto. And I don't think it's the best wallet, but if they can go after MetaMask, then they can almost surely go after other wallets as well. In another piece of news, US authorities arrested the two co-founders of crypto mixing service, the Samurai wallet. So that's unfortunate, right? These people were charged with money laundering, and that fits with this pattern of the US government getting stricter on things related to crypto. And then in the final piece of news about US government crackdown on crypto, there's this from yesterday, April 25th, a PSA from the FBI with an alert on cryptocurrency money services businesses, basically warning Americans against using, and I'm quoting from them, cryptocurrency money transmitting services that are not registered as money services businesses. And for example, this is again their words, avoid cryptocurrency money transmitting services that do not collect your know your customer KYC information when customers when required. And the challenge with this is anyone who's actually used crypto knows that for people who are using crypto, not just trading on exchanges, the idea of being a customer and giving your KYC information almost doesn't make sense, right? You could download a wallet onto your computer and you're self-custodying funds and you're sending it to someone else. The quote business in some of these cases, the wallet, if they're considering that as the money service business, that they're not actually holding your funds, right? You're still holding custody of it. So I would say this one actually probably concerned me the most of all of this news, because hopefully it doesn't turn into a crackdown on people actually self-custodying and making crypto transactions themselves. And a question I get all the time is, what does this mean for crypto in the US? What does it mean for DeFi in the US? And short answer is, of course, I don't know. I'm just a small YouTuber, but I will say I live in the United States. I have always lived in the United States. I plan on staying in the United States, and I'll continue making tutorials about DeFi and on-chain apps as long as I can. And I ultimately think that the cat is out of the bag as far as public blockchains and decentralized applications. I think there's so much momentum on the side of this technology that even if things get delayed by months or years because of some of this government action, I ultimately believe that DeFi and crypto is going to come out on top. With that being said, let's talk about some more DeFi specific news. So lighter side of things, Stacks, one of the leading Bitcoin layer 2s, started their Nakamoto upgrade. This is promising to make Stacks significantly faster, lowering the time for transactions from minutes to seconds. I've got a whole video coming out on Stacks soon, so be sure to stay tuned for that. Another one, Ondo Finance, announced that they are bringing their USDY stablecoin to Cosmos in the IBC protocol ecosystem. I covered Ondo on this channel back when it first launched. Ondo is a platform for tokenizing real-world assets, and their USDY stablecoin stands out because it accrues yield from US treasuries. And so I think this is good for the Cosmos ecosystem, also good for Ondo because it shows them expanding to new chains. All right, now let's get into some DeFi and airdrop opportunities, because airdrop season, despite what some people are saying, is not over. There's still tons of opportunities, especially with a number of active or upcoming Ethereum layer 2s. Before we get into those, a quick reminder that this video is sponsored by RabbitX. If you're trading and you want to stay on-chain trading from your wallet, RabbitX is my go-to perp dex, link in the description. All right, so first opportunity is Velodrome. Velodrome released their Slipstream Concentrated Liquidity, AMM. And the result of this, if you go to Velodrome on Optimism and go to their Concentrated Liquidity section, is you can see that the APRs are, I would say, quite impressive right now. For example, with USDC, USDC.E, Concentrated Stablecoin Vault, you can currently earn 32% APR. With Wrapped Staked ETH and Wrapped ETH, you can earn 49% APR. And with USDC, Wrapped ETH, this one is not going to last forever, right? This is just too high to last forever. But at the moment, you can earn 885% APR on this vault. And Velodrome, if you don't know, it's been around for years now. It's been the largest DEX, or one of the largest DEXs on the Optimism layer 2 since mid 2022. And so it's relatively battle tested at this point. However, I would note that the concentrated liquidity vaults are relatively new, so keep that in mind. But Velodrome, great opportunity, and they're expanding to other chains soon, starting with Mode. So you may be able to soon access this on other chains as well. Piece of airdrop news: Layer 0, probably one of the most anticipated airdrops, confirmed that their token generation event is drawing closer. So nothing to do yet. However, if you haven't farmed Layer 0 yet, now might be a good time to start. I will say, I think this one is probably a little over farmed, right? Before the current airdrop meta took off, there were tons of people, Layer 0 was one of the main airdrops they were farming. So there's lots of people who have made transactions over years and years and probably made hundreds of transactions. That being said, if you don't want to miss out and you're doing some bridge transactions, you could throw in some bridges using Layer 0, Stargate, or using other Layer 0 linked applications to hopefully qualify. Another piece of news: Renzo. Renzo is one of the leading liquid restaking platforms, and they announced their airdrop. They basically got lambasted on social media for it because their total airdrop allocation was around 10%, and their initial pie chart that they posted, basically, even though the percentages were low, made it look like the percentages were higher. I can't show it to you because they've since deleted it, but it showed the 10% as if it was like 20 or 25%. And so people were sort of going after them on social media. They heard the feedback. They decided they want to support the community more, so they upped the percentages. Total airdrop allocation was increased to 12%, and the claim date is April 30th. So keep that in mind if you've been farming Renzo. Claim date is coming up just 4 days after I make this video. Snapshot date is April 26th, which is today. So chances are by the time you see this, snapshot date has already passed. But if you've qualified, if you've been watching these videos before, April 30th is going to be your claim date. And if you have 360 easy points in your wallet, you will get something. We'll see how much it's worth, right? And you can check all this out at the website renzoprotocol.com, link in the description. Next up, and I think this is probably my favorite airdrop opportunity at the moment, is going to be Mode. Mode is an Ethereum layer 2. They have this vast economic incentives experiment program going on right now, and the TVL has just been growing like crazy recently. I made a video on it a couple weeks ago, and even since then it's grown significantly, where it's currently at $344 million on chain. And they have some new things going on where you can actually earn some additional rewards compared to what you may have been doing by just using Mode natively. They just announced a couple days ago this dev drop user distribution. The way that this works is that this dev drop, these are NFTs which represent a future token allocation that Mode is distributing to protocols, not to users. So each project will distribute these NFTs over the next 30 days, and it's up to the projects how to distribute them. So it's an indirect airdrop where Mode is giving it to the protocols, and the protocols are giving it to users. And note, this is in addition to their main airdrop for points later. This is the dev drop. And you can see here on their website which projects have qualified. I'm not going to read all of them because there's a huge list, but to name a few: Renzo, StakeZone, Ionic, Sturdy, Layerbank, Ironclad, Moland, Kim Exchange, etc. And so each of these protocols gets a certain number of Mode photons and Mode orbs, and each of those NFTs will be redeemable for some amount of tokens eventually when Mode launches their token. And it's up to these protocols how exactly they're going to distribute them. So if you're using any of these protocols or you're considering using them, be sure to check in with those individual protocols to see how they're distributing the NFTs. Next up, we have Swell Network. Swell Network is a liquid staking platform, a liquid restaking platform, and also an upcoming layer 2. They have an ongoing points program right now, the Swell Voyage, that many of you may be familiar with already. And the cool thing about this is that if you deposit into the Swell L2 pre-launch, then you are qualifying for an airdrop from Swell. They've already said that outright. You are earning your share of 1 million EigenLayer points. You're also earning points and yield of deposited assets. So for example, you could deposit some other asset like Renzo's Easy ETH, or since that's closing soon, probably another sort of liquid restake token. And then all of that, is coming basically from one single action. And you can see here on their website that you have 11 days from the time that I'm making this to actually deposit. There's already $350 million deposited, so it's certainly already farmed fairly heavily. I also think it's nothing in crypto is low risk, but it's less risky than many other farms that you could deposit into. The main question here is, right, do they hit their deadline for time and withdrawals and all that? So that's kind of the main risk, is you're locking your funds up. But part of the reason I wanted to highlight it is that Swell has been really highlighting a lot of the partner protocols recently who have assets that you can deposit both to earn yield, points, and qualify for their airdrops. For example, you can deposit USDE from Athena. You have this FIDE treasury protocol that's building on there. You have Frax Finance has arrived on Swell Layer 2, where you can deploy Frax Finance tokens pre-launch to get a share of Fraxtal points. So there's just a ton of things if you're using Ethereum DeFi, if you're farming these other airdrops in the Ethereum DeFi ecosystem, that you can earn points and yield by depositing onto Swell. And then the final announcement today, final piece of airdrop news, is that Camp Network, this is a upcoming modular L2 leveraging off-chain data from Web2 social platforms. Their testnet is live. They recently raised a $4 million seed round, and now you can use their testnet. And there's already 30,000 wallets on this as of a few days ago. There's no guarantee that the testnet results in some sort of airdrop, but the nice thing about testnets is they're free, just cost you your time. And the other nice thing is that oftentimes they do result in something when these protocols do airdrops. And if you want to keep up to date on more DeFi and airdrop news, strategies, and on-chain analysis, be sure to check out my newsletter, dynamodefi.substack.com, where I cover all of this and more every week. For more videos like this one, be sure to like and subscribe. And until next time, this is Dynamo DeFi.